Good day, I'm Chatad, your accounting tutor. In today's video, we are going to continue from posting of transactions into ledger using the principles of double entry under the topic Introduction to Accounting, Double Entry System of Bookkeeping. We are going to continue. This illustration, I want to emphasize that they are the most salient areas of that learners find it difficult to pose in double entry because they are not just clear as the way learners think. So there must be much explanation for them to understand how these transactions are posted using double entry via the principles. The first one is on the 15th of April 2026, receive rent 30,000. In this case, in any transaction, there must be a receiver account and there must be a giver account. So in this transaction, rent received become the giver account, while cash become the receiver account. But how? Here we are saying that the business is receiving rent. The rent become the giver account because rent is giving the business money and the business is receiving cash from the rent that was given out. Then in this case, cash is not mentioned here, but it is cash. Why? Because if rent is received by the business, then it means that the rent was received by cash. So in this case, cash must not be mentioned before you use cash as the receiver account. I still want to clarify issues like paid wages, 9,000. Cash might not be mentioned, but it is still cash. Because if wages is paid by cash and cash is not mentioned, it still means by cash. So sales, 9,000. Cash is not mentioned, but the sales is by cash. So this type of transaction, anytime cash is not mentioned and the transaction amount is mentioned, most likely it is cash. If it is by bank, check or bank will be mentioned. So take note. Let's continue. Rent received become the giver account, while cash become the receiver account. So how can we pause using the principle? We now say that rent received account become the giver account. Please don't open rent account. Don't open rent account. You must say rent receive account because most lenders open rent account. If you open rent account, it sounds like an expenses account. So you must attach the word receive before it qualifies it to become income. And all income in accounting are credited, just like sales, commission received, and the others. So now say rent received account is credited because it's giving cash. On what date? On the 15th of April 26, cash of 30,000. You now come and open your cash account as a receiver account, and you now say cash is receiving from rent received, and the amount is 30,000. That is all. Let's go to the next one. On the 16th of April, paid ABC Limited by cash, the amount owed 40,000 after deducting a discount of 5%. In this case, you must determine the receiver account and the giver account. Here, the receiver account, the giver account is cash because the business is paying ABC Limited. You recall that in my previous video, the business purchased goods on credit from ABC. Then now, the business is paying ABC. And in the process of paying, the business receives a discount of 5%. So you must follow my previous video before you're able to appreciate very well why we are paying ABC today. And the amount of goods purchased on credit was 40,000. Let's see how we are going to post this transaction with discount involved, which most lenders find it very difficult. I'm going to give you more clarity to it. Here, the giver account is cash and the receiver account is ABC Limited. So we are going to credit cash as a giver account and debit ABC Limited as the receiver account with a discount. But before you do that, you must bring out your workings. And these are your working. You recall that in the previous video too, there was a return outward to ABC Limited that was 2,000. If you watch, there was a return outward. So in this case, you now take the initial amount on to ABC, 40,000. You must first reduce the return outward value of 2,000, giving the value of 38,000 that was on to ABC Limited. Then in the process of paying ABC Limited gave a discount of 5%. So the business received discount. And that 5% of 38,000 of the balance with the return become 1,900. So 38,000 minus 1,900 give you 36,100, which become the amount that the business is going to pay after a discount of. How do you now post now? You now come to the giver account. Always start with the giver account. You now say that on a faithful day, cash is given, that's on the 16th April, cash is given to ABC 36,100. Why is 36,100 is already explained from the workings under ABC Limited. Then who is receiving now? ABC is receiving the amount of 36,100. This transaction is in the previous video whereby goods were returned to ABC Limited. So return out what was credited, and that is why ABC Limited account is debited as a receiver account. Then look at the purchases that was made to ABC Limited, which was on credit when purchases were debited and ABC Limited was credited. Then now that there's a payment, ABC Limited is receiving 36,100. Then in the process, there was a discount of 1,900. So this discount become what is called discount receipt. Discount receipt. And discount receipt is revenue. You come and credit your discount receipt account because it's a giver account. You now say, on this fateful day, 16th of April 26, discount receipt by ABC from ABC Limited was 1,900 naira. Then the corresponding entry will now come to the receiver account here, which is from this account. So in this case, the receiver account become from ABC Limited, which you now see discount received 1,900. Then by mail look, you discover that the account is balanced because the business on ABC 40,000 and there was a return of 2,000 and there was a discount received of 1,900, and that's what the payment was 36,100, and the 40,000 had been settled without the business on ABC again. Let's go to the next one. We now say that on the 17th of April 2026, received check from Mr. Ondana of the amount owned by him of 20,000 after deducting a discount of 5%. Here, just like in the case of ABC, now the business is not paying, but receiving. So we want to identify the account that give and the account that receive. That is the most important thing. Here, the account that receive become check here, but don't use check. I emphasized in the previous video, anywhere you see check, you should use bank. Then bank become the receiver account, while Mr. Onduna become the giver account. So Mr. Onduna is giving, while bank is what? Receiving. But there was a discount of 5% in the process of the transaction. Here too, you must demonstrate your working. Otherwise, you don't understand why the payment was 16,150. Let's go back. If you watch my previous video, the business sold goods on credit to Mr. Onduna worth 20,000. In the process, there was return inward by Onduna worth 3,000. So 3,000 minus 20,000 give you 17,000. Then in the process of receiving 17,000, the business allowed a discount of 5%. If you want 5%, of that, you discover that the discount is 850. So if minus 850 by 17,000, you're able to get 16,150, which become what the business is paying, is receiving from Mr. Owner. Let's come and see how we make the payment. Always start with the giver account, and the giver account here is Mr. What? Onduna. Let's go to Mr. Onduna account. Mr. Onduna account is here. So we are saying that in the process, I want to go back. If you watch my previous video, I told you that we sold goods on credit to Mr. Onduna worth 20,000. And then Mr. Onduna returned goods back to the business worth 3,000. Now, what was remaining, then in the process of payment, there was a discount. There was a discount of 5%, which we worked out and discovered as 850. So Mr. Onduna is paying the business, giving the business 16,500. And the corresponding will now come to the bank account of the business. Look at bank receiving, which is a receiver account, receiving from Mr. Onduna worth 16,150, which is the amount that remains after discount. Then that will give rise to what is called discount allowed account, which is an expenses in accounting. And we say that all expenses are debited which discount allowed is also an expenses. So here, the corresponding entry, which is here, will now be debited in discount allowed account as coming from Mr. Aonda, and that is how the transaction will proceed. Finally, you come back to another area that is most confusing to learners, whereby we now say that the owner introduced cash of 50,000 into the business from his personal earnings. So, anytime I talk of personal earning, you must recall what is called business entity concept, whereby the owner is different from the business. So, if the owner put money into the business, it's referred to as capital. If the owner withdrew money out of the business, it's referred to as drawing. That is under business entity concept. So, now that the owner put money into the business, what the owner is introducing into the business is called capital. So in this case, the owner introduced cash into the business is referred to as capital. And capital becomes the giver account. And then the receiver account is cash, because the business is receiving cash from the owner by way of capital. So capital will be credited as the giver account, while cash will be debited as the receiver account. Why are we talking of capital? Because the money is coming from the owner, from his personal earning. It's the personal earning that makes us to know that it's capital. Because the owner is not borrowing money, rather is taking money from his self-earning to put into business. That's a scenario that we refer to as capital. In this case, the giver account now becomes capital. On the 18th of 4, capital is giving to the business cash of 50,000. Sorry, 50,000 I need to say. They now come to cash account. I now say on the 18th, cash is receiving from the from capital, which is the amount introduced by the owner, which is referred to as capital, and the amount is 50,000. From this transaction, these are the most areas that learners find it very difficult to be able to post transactions short like this into the ledger account using the principle. So if you follow me up, you'll be able to understand how such transactions are posted using the ledger account. If you have any comment, you make sure you ask in the comment section, and make sure if there's anything that you're not clear, still ask, that I'll be able to come back and give clarity by solving more questions to explain such areas. Thank you. See me in the next video.